into it now, but I was like, well, like they're gonna keep making more dollars. And whereas silver and gold is like harder. So I kind of viewed it as savings as like my first investment in a way before I shifted more toward equities. So for whatever reason, it just became a subject that there was never really a moment where I became aware. It's like I just kind of grew up increasingly aware and increasingly interested in investing and studying the current system.
So it was very, very, very similar to for me. I also started with gold. I actually stuck with gold for too long. Did you sell your gold, or are you still investing in gold?
I still own gold. I have it in portfolios. It's a useful diversifier. I kind of put it there in place of bonds. If I want something lower volatility that can just stay there. I also think there's something to be said about having just like physical analog money in reach, like,
Hmm.
bearer instrument money that's outside of the banking system. But I mean, obviously, like, I'm Bitcoin has a pre-published research, both like open research and then like a research service. And so I cover macro, I cover different asset classes, and I cover updates on Bitcoin. And so of course the election has outcomes for a number of these things. I think in the U.S. And I'm probably elsewhere, but in the U.S. a lot of investors I think maybe focus a little bit too much on politics. They kind of assume
Hmm.
that the president can control everything, whereas it's just one big piece among many others. But obviously, elections have outcomes, and so I'm monitoring right now some of the fiscal implications that it could have. Touching on the other aspects are generally outside of my focus because I focus on investment, so it's mainly the numbers that are relevant. So from a macro perspective, it's what are the likely spending or taxation changes that they're not going to do or that they're going to do? So, for example, there are certain tax cuts that were done in Trump's prior term that are set to automatically expire. And a Trump victory with a red sweep probably increases the odds that those get renewed or at least mostly renewed. We have to see what happens with tariffs. That's kind of a big. I think it happened at the right time. I think this kind of resumes the bull market that we were in maybe before that we pulled forward some of that bull market. Um, I don't like anyone else. I don't know if we're going to retest the breakout area or not. I don't really follow too much the day-to-day price action. But I think it's a healthy bull market to kind of enter. And I'm generally bullish for the rest of this year and then kind of next year.
I don't know. Do you give out price targets?
Not generally. I released a report with Sam Callahan a little while ago that kind of analyzed that Bitcoin tracks with global liquidity indicators pretty well. It's among all assets that I cover, Bitcoin is the price is more correlated with these measures of global liquidity than any other asset that I track. So I generally have opinions around, say, 12 to 18-month price direction. There's sometimes I'm more cautious if we're looking at on-chain metrics that are pretty inflated and then kind of like liquidity's rolling over and like I tend to be more like trying to manage expectations around what's going to happen.
Hmm.
We're being more structured that Bitcoin is kind of working its way up the monetization route. So it goes from collectible to kind of niche medium of exchange. Like for example, when WikiLeaks lost all their payment rails back in like 2011, that was one of the first kind of tangible use cases of Bitcoin. I think it was 2010 actually, but basically it was like let's send Bitcoin if you want to donate rather than these other methods because they were shut down, and it became this like backup option. Then of course it's limited by its supply cap, so it became more interesting to long-term holders and investors. And there's kind of a like liquidity limit. So when Bitcoin was fairly small, where a handful of people, a handful of wealthy people, if they want to buy it, they end up moving the price.
Hmm.
Um, that there was liquidity limitations for what institutions could do with the asset. And so it kind of had to reach certain levels of adoption before it even gets on their radar in any serious way. And I think now we're entering that it's a large and liquid enough market that major institutions and higher highs. And I think that's relevant. I think when people see it firsthand that this is, they keep ignoring it and it keeps going higher. I think people start to take it more seriously.
Going back to the idea of Bitcoin as a monetary technology, because I think this is the right viewpoint as well. Um, if I wanted to explain this to my mom, right? Um, like where do I start? Because it's rather easy to explain. Well, first we had the landline, then we had the dumb phone. Now we have the smartphone. People can kind of relate to this, even though it all went very quickly. Now we have AI. You know, everybody is completely convinced that AI is going to take over the world within like 2 weeks, right? But with like when I go there and say, okay, maybe we should use a computer instead of central banks, and you know, people look at me like I'm crazy. And I think it's because you know, there is a lobby and there's vested interest into the system. So how far do you go back? Is it 400 years?
Over the speed of telecommunications. And the problem is that when you have transactions moving at the speed of light, but settlements still slow, one of the solutions for it is centralization. So
Mhm.
even though there were central banks prior to that time, like you mentioned Amsterdam, of course, there's the Bank of England as well. Um, the kind of the era of central banking took off because this was basically a time for them to say, well, like you have all these kind of things netting around. Let's all put it on our big ledger, which is that's what a central bank is. It's kind of the national ledger that underpins all the other central banks. They kind of pull it into this one big thing, compared to a free banking arrangement where gold and silver is kind of the nature's ledger. So we solved these kind of mismatches through centralization. And so the way that I kind of describe Bitcoin is that technology's finally progressed enough where we now have very fast settlement in addition to transactions. So we've enjoyed fast transactions for a long time, but no way to finally settle value, like other than very slowly. And now we finally have the ability to do that within minutes or in some cases seconds, depending on a higher layer of the technology. And so this is good. I think we should, so there are people in government that are saying, let's go back on a gold standard or
Mhm.
let's embrace Bitcoin. But those tend to be the non-majority view in a lot of cases. And I think that's probably going to continue for a while. And I also think that even as countries embrace Bitcoin in some ways, like, for example, a sovereign reserve or something, I've generally been of the view that governments are going to be anti-privacy for quite a while, because ever since the modern era, they shifted a lot toward income taxes. That kind of requires surveillance to make sense. So back in the older days before income taxes, there were different types of taxes because you like even if you were a king and you had all sorts of grandiose views of what you should control, you wouldn't even think that you could monitor everyone's income and take a certain percentage. Like too many transactions were inherently private for that to be a workable thing. And so taxes were done in other ways. But in the modern era where everybody has a bank account, and it's all kind of centralized, an accident that we don't really see that anywhere in the world. When the entire world goes one direction for a period of time, there's generally something more fundamental behind it. Kind of technology enables something to happen, and then people in power seized it everywhere. There's not like any exceptions really. Um, but one of the things I point out is that because of Bitcoin, we finally have technology to roll a lot of that back. So most financial innovations over centuries were centralizing in some way. So
Mm.
we're exchanging gold and silver, and then we put the emperor's face on it to help standardize it. And then we want to transport gold between different cities and different regions without the security of potentially losing it. So then we build like paper IOUs on top of it, and even the invention of paper itself was a monetary technology at the end of the day. It helped kind of change how people in practice use money. And then the invention of the printing press further changed what you can do with paper, economically. It kind of opened up. It kind of you could say it reduced the cost of analog encryption, because it's kind of like you can settlement system, our biggest one between banks, and it sounds like a funny number, but they settle $1 quadrillion worth of value per year, so 1,000 trillions worth of gross settlement volume per year. A lot of that is for the rest of the world too, because all these, a lot of international contracts occur in dollars. So that's settling for the U.S. It's also settling indirectly for entities around the world. And the funny thing is, they do it with about as many transactions per second as the Bitcoin network.
Mhm.
So
Mm.
they do something like 200 million transactions per year at around $5 million for the average transaction size. And that's how they get a quadrillion dollars worth of settlement. And the way that I generally view it is that Bitcoin is now a global decentralized version of that, and that we have to build layers on top of it to the extent that people want to trustlessly send value quicker and cheaper with each other. And then for some people, using banks or third parties could be helpful. Maybe it's solving a problem for them. Underlying assets centralized anyway, so people are less picky about what blockchain it's transferring across. Um,
Mm.
you know, I do think that for the most part, at scale, store of value precedes medium of exchange. So more people have a savings problem than a payments problem, especially in the developed world. So especially in the United States and Europe, we have more of a savings problem
Mhm.
than a payments problem. Um, I wake up every day thinking, what can I store value in so that I still have value 10 years from now? I don't wake up.
Is that really the first thing that you think about in the morning?
Well, I was going to compare that to the alternative. Like I don't wake up and say, I wish my payment methods were more efficient.
Oh
I
yeah,
wish I could
okay, okay.
I wish I could pay for Starbucks easier than I currently can, right? So between the two, there's one I think about and there's one that I rarely think about. And that's true for a lot of people. Um, and because Bitcoin's volatile, it's emerging into, it's got some sort of total addressable market. As generally Bitcoin bulls, we have ideas of where that total addressable market might be, pretty bigger compared to where it is now. Basically, the value for good money is quite large. But it has time to, one, be tested, be understood, be educated for fiat. Then it wouldn't be very valuable to me. It'd be this like centralized thing. The fact that I have the optionality that I could pay for goods and services in many urban centers around the world or online is part of what gives the store of value its capability in the first place, even if I'm not doing a lot of volume with that.
And it would mean, and this is something I do think about a lot, it would mean that we have a chance for like putting many billions of people who now are living in systems that are even brokener than ours, if that's even a word, right? We can put them on a hard money standard and they could, get to work and actually get actual money for their work and then transact that money. And basically what we're talking about here is a completely new economic paradigm that the world has literally never seen before.
Yeah, and I spend part of each year in Egypt because I have family and friends there. In fact, I'll be there in a week again. Um, and the debasement rate there, I mean, the money supply grows at over 20% per year on average. So in the United States, it's averaged about that can help that because that's one of the things I emphasize in the book that there's almost 200 countries in the world, many of which have their own currencies. Even the pegged currencies sometimes break their pegs. And there's a variety of different debasement rates happening around the world that are billions of people are negatively impacted by them. And so there's obviously a really big problem set here to address with better money where we can.
But do your friends in Egypt, do they get Bitcoin? I mean, do they save in Bitcoin now because you told them about it or because they found out about it? Because the examples that you gave were not Bitcoin related.
So for the most part, no. And this is one of the things I found interesting is that, for example, I mean the two most populated two of the most populated countries in Africa are Nigeria and Egypt. And Nigeria is way ahead in terms of Bitcoin and stablecoin adoption
True.
compared to Egypt. Egypt has been slow, both even in stablecoins, but also Bitcoin. Um, and I think part of that was because Egypt, so they tend to peg their currency for like longer periods of time, and they kind of create the sense that it's pretty stable. And then usually there's
Mm,
one big devaluation
yeah.
all at once, and then people go back to thinking, okay, we're stable again, and then 3 years later it devalues again. It's multiple
Mhm.
times. You start to realize that this isn't tulips. So when people first see a bubble, they think it's tulips. The second bubble, they're like, well, that was just liquidity because of COVID. People can find narratives to dismiss it. But when they see it come back multiple times, they're more likely to be like, you know what, I'm actually going to take this asset seriously now. Some people do change their minds. Some people, they finally listen to their friends and colleagues and realize maybe I'm thinking about this wrong. And then they read about it or they otherwise educate themselves about it. And then to varying degrees, they say, more structurally, this asset's real. It's the best at what it does, and what it does is valuable in a world of centralized money and debasing money. And now you have decentralized and non-debasing money, and I think more and more entities are waking up to that.
Okay, Lynn, thank you very much. One last like big topic, because we have been talking about how Bhutan and El Salvador and maybe Egypt.
As long as you're not like anti-Bitcoin, and if you're anti-Bitcoin, we're going to fund your opponent. Um, and that's a trend that's real. And government's not a monolith. So I think more and more entities in government, whether it's the US or elsewhere, start to appreciate it. And it's better to be early on that trend than be late. If you're like the last country to get it, um, you lose out. Whereas if you're one of the early countries to get it, like Bhutan or El Salvador, you benefit disproportionately.
But that's why I'm so like flabbergasted. It's we're jumping from Bhutan from El Salvador to Bhutan, and then we're not jumping to like Turkey. We're jumping to the United States of America. And that's weird. That should not be like, it makes sense, of course, from the perspective of the biggest capital markets and the best understanding of money. And of course, what Trump said about the energy, I think is even more relevant, because he said we're going to have the cheapest energy in the world. I mean, that is a big statement, right? And you cannot do this, probably cannot do this without Bitcoin miners. But still, like I am.
And if anything, I mean, they've boosted their tourism numbers. The number of Americans and other people, Europeans traveling to El Salvador has increased because it's like the Bitcoiners around the world go there, and they basically also say, hey, if you want to have a business, we're open to that. Um, and so I think that there's a lot of disproportionate benefits from understanding it and then acting decisively. And it hasn't happened at the same speed everywhere.
It must be the people, right? You're totally right about Fidelity and BlackRock, and I mean this is of course alternative history, but if Jack Bogle was our age, he would be all over Bitcoin. I'm 100% sure, the founder of Vanguard, right? And his Bogle heads, the people who buy Vanguard index funds, the only reliable source. Like if there's a crash, they always buy more, right? Just like Bitcoiners, like hodlers. So what do you think, Lynn? Like, I know this is a stupid question, but what do you think we're going to see for 2025?
They tend to have very long lifetimes, and they can update in backward compatible ways to stay relevant with technology. So Ethernet gets faster, but it's still Ethernet. USB gets faster, but it's still USB. And I think Bitcoin is now we have this monetary protocol that has
Hmm.
achieved network effect dominance, and exists now, and that alters the world just like some of these other protocols did.
And also, if the US really does this, if the US really gets the miners in, does a stockpile, runs a very Bitcoin friendly policy, it really like forces other countries, including China and hopefully Europe, to actually follow suit, because otherwise they would be at a huge disadvantage.
Exactly. Yeah, and I think all else being equal, it's better for smaller entities to get it first, because that can kind of
Yeah.
diffuse power to some extent. If the United States gets it pretty early, that's not good for a lot of like mid-sized or other large entities because the power gap then just increases more. So that's why decisions matter.